Right now, something very strange is happening in the silver market, and almost nobody is talking about it. The price you see on screens says silver's cheap, calm, and under control. But behind the scenes, a silent squeeze is building, inventories are thinning, and confidence in price discovery is cracking. The big question for 2026 is simple but powerful. Is the COMEX silver price still real, or is the system finally breaking? Before we go deeper, if you enjoy clear explanations about global markets, money, and hidden risks that mainstream media ignores, make sure to like this video and subscribe to Global Economy Insights. It really helps the channel grow, and it helps this content reach more people who want to understand what is actually happening in the global economy. Now let's talk about silver, because silver is not just another metal. It is money, it is industry, and it is trust. For decades, the COMEX futures market has been the main place where silver prices are discovered. On paper, this system looks efficient. Buyers and sellers meet, contracts are traded, and prices are set. But here is the uncomfortable truth. Most of the silver traded on COMEX is not real silver. It is paper silver. Paper silver is a promise, a contract, a claim. It says you own silver, but in reality, no physical metal changes hands. This works only as long as most people never asked for delivery. The moment too many investors say, "I want the actual metal," the system starts to shake. And this is exactly where we are heading as we move toward 2026. Over the last few years, physical silver demand has been quietly rising. Industrial use is exploding because silver is essential for solar panels, electric vehicles, electronics, medical equipment, and advanced technology. At the same time, investors around the world are losing trust in paper assets. Inflation, debt, crises, banking stress, and currency debasement are pushing people toward real, tangible stores of value. Gold gets the headlines, but silver's where the pressure builds faster, because the market is smaller and tighter. Here is where the problem begins. The COMEX price reflects paper trading volume, not physical availability. For every ounce of real silver in COMEX vaults, there are many paper claims sitting on top of it. Some estimates suggest dozens, even hundreds of paper ounces exist for every real ounce. That imbalance is dangerous. It works in calm times, but it fails in times of stress. As we move closer to 2026, signs of stress are becoming harder to ignore. Registered silver inventories have been trending lower. Large deliveries have been draining vaults. At the same time, mints around the world report strong retail demand, higher premiums, and delays in physical supply. This creates a split reality. On one side, the screen price says silver is cheap. On the other side, real buyers are paying more and waiting longer to get metal in their hands. This is exactly how price discovery breaks. When the paper price no longer reflects physical reality, trust disappears. And markets are built on trust. A silver squeeze does not need dramatic headlines or sudden crashes. It can happen slowly, quietly, and then all at once. At first, it looks like small delivery delays. Then premiums rise. Then large players start asking questions. Then suddenly, someone demands physical delivery in size, and the system realizes it cannot deliver without pushing prices much higher. What makes 2026 especially important is timing. Global debt levels are extreme. Governments are running massive deficits. Interest rates remain a problem no matter which direction they move. If rates stay high, debt breaks. If rates fall, currencies weaken. Either path increases demand for real assets. Silver sits at the intersection of monetary fear and industrial necessity, which makes it uniquely vulnerable to a squeeze.
Another key factor is confidence. The COMEX system depends on the belief that contracts can be settled smoothly. But confidence is fragile. Once market participants believe that physical silver is scarce, behavior changes. Investors stop rolling contracts and start taking delivery. Industrial users hedge more aggressively. Retail buyers rush to secure supply. This feedback loop tightens the market very quickly. Critics often say silver has been manipulated forever, so nothing will change. But systems don't break when everyone is calm. They break when stress meets imbalance. The imbalance is already there. The stress is building. And silver has a long history of sudden, violent repricing when the pressure becomes too much. If the COMEX price discovery mechanism truly breaks, the consequences will be significant. We could see a widening gap between paper prices and physical prices. We could see exchanges changing rules to limit delivery. We could see cash settlements replacing metal delivery. And once that happens, the illusion of a free and fair price collapses. This is why the silver squeeze narrative matters, not as hype, but as a warning. It tells us something deeper about the global financial system. When paper promises multiply faster than real assets, reality always wins in the end. Silver does not need to go to extreme prices overnight to prove this point. It only needs to become unavailable at the quoted price. For long-term investors, silver is not about quick trades. It is about insurance. It is about optionality. It is about owning something real in a world that is increasingly virtual and leveraged. The events leading into 2026 may not be smooth, but they will be revealing. They will show us whether price discovery still reflects truth or just convenience. As viewers of Global Economy Insights, the goal is not fear, but understanding. Markets reward those who prepare early, not those who react late. Watching inventory levels, delivery data, premiums, and policy shifts matters far more than watching daily price fluctuations. And now I want to hear from you. Do you think the COMEX silver price still reflects reality? Or do you believe a silver squeeze is inevitable as we approach 2026? Share your thoughts in the comments. Healthy discussion helps everyone see the full picture. If this video helped you understand the silver market in a clearer way, don't forget to like and share it with others who care about real economics, real assets, and real risk. Your support keeps Global Economy Insights growing, and it allows us to continue breaking down complex global issues in a simple, honest way.